Hello. So this is going to be a video just showing how I recap markets if I miss a trading session. So I did not trade the session on Friday. I actually was busy traveling, started traveling Friday morning, and therefore I did not trade on Friday. Usually when I'm traveling, I try not to touch the charts because it's quite a distraction when I'm out of the office. But when I do get some time to look at the markets, it is pretty much like I did trade the session because I get myself back into the mind frame of what would I do if I was in this scenario at this specific time. So that's what I'm going to do. I'm going to just mark off top down analysis, explain what I've seen in the markets and what I would have done if I was in that specific scenario. Therefore, I can see, okay, if I did trade that session, would I have won? Would I have lost? Would I have not traded? How much would I have won? How much would I have lost? And that way, it's like I didn't miss a session at all. I'm going to start off with the Nasdaq. You can see on this chart, it's the U.S. Nas 100. It's currently Sunday, January. Now it's Monday, January 12th, 2026, and we are officially done with the first week of January. It was kind of a choppy week, first week of the year, and don't like to mix geopolitical events, but we were waiting for non-farm payroll to hit, and looks like it finally hit. So I'm just gonna mark this up, show what I see from the top down when I look at the daily chart, and then I'm gonna get into some gold, and I was also requested to look at silver as well. So from the top down analysis, you can see I already marked off my levels to save time, marked off my major and minor levels on Nasdaq from the daily chart all the way down to the 4 hour. It looks a little confusing right now, so I'll just explain in just a moment what I have. Sometimes just erasing the charts and starting fresh and clean also helps. You can see that there's a major swing high right here, major swing low right here, and that was for this up wave. There's a major swing. Sometimes it can be a little distorted. So what I would do is I'm just gonna remove all 13 drawings so we can start fresh, and I'll just mark this up with you so you're not confused. Take a look at the daily chart, mark off these levels, and get going. So I'm gonna look on the way up. We have a major swing high right here, major swing low right here, major swing high right here, major swing. So price kind of is around this level. And that was the last major uptrend that I do see. So I'm just gonna mark that off. I'm gonna clone that, mark off just the major highs, major lows. Just around the general area, you can see it's a really small area. And on the way down, the most recent major swing high is around a similar area. We have swing high right around here. Swing low is a little bit lower. So I'm going to mark that one on off as well. And that's all I can really see. When I look to the far right, I do see these little minor levels, but it's if it's so small, it's to me it's just insignificant. It's not really going to make a difference whether I mark them up or not. It's just going to draw more confusion. So I'm going to leave that alone. If I see that these levels pop up on a smaller time frame, then I will end up marking that off on the 4 hour. And I'm looking at this area right here. See how it's not really going anywhere. If I try to force something on this daily chart, it's going to be too confusing and it's going to be really annoying. So, and it could also draw more mistakes than help. So I'm going to leave that alone. I'm just looking at the major ones that pop out to me in the most recent history. Sorry about that. That's the weekly chart. Let's get onto the 4 hour chart, and you can see it's a little bit more clear. Now, if I look over to the far right, these major levels do pop up a little bit better. We can see that there's a major level right here. This was marked off on, this was created on Wednesday. Apologies for that. This was created on Wednesday. This is the last major swing high. And then the last major swing low on that up wave or that uptrend was right around here. Sometimes I gotta double click. I don't know why that's not clicking. Moment. Okay. And then I just look on the way down as well. We have swing low, swing high, swing low. The swing high, if it's already in a pretty similar area, I just leave it alone. And then you can see the swing low is in a pretty similar area, so I'm not gonna like mark a ton of levels. That's just the something that I don't want to do. And that's it. These are my major levels. So I'm also going to mark off from that's Thursday from Friday. So let's just mark off from when I would have started trading. That would have been on Friday. Friday was non-farm. You can see moving all over here. Friday, Friday the night. And in my time, it's going to be London session is going to begin around 15:30. So I'm going to mark off this 14 o'clock bar right here, the vertical line. I don't know why it's not showing a vertical line. It's supposed to be all to be. I was clicking that. I don't know why it didn't show up. It's not showing my vertical line. All right, should be working now. Oh, Alt V, vertical line. There we go. Okay. So now I have my major levels marked off. That's the first thing I do when I log in. Mark out the major levels. Let's read the context. Let's get into the pattern after, and let's get ready to see what I would have done. Context on the daily chart. I always look at it from a full screen view. So I'm gonna pop this out, double tap the y-axis, double tap the x-axis, and just to see, and I move it to before that vertical line to see what the market was looking at. And I did mention that Nasdaq is currently at all-time highs. So usually when prices at all-time highs, it could get a little tricky, a little choppy, because prices, people are trying to make a decision on whether we want to see this go break those all-time highs or reject it. So it does get really choppy. You can see back in November was the most recent time price actually did go to all-time highs. I'm going to mark this off on the chart so you can actually see. Uh, Bear with me for a moment while I add this drawing tool to my favorite, the brush tool. All right, and also let me put the highlighter brush tool is fine. All right, see back in November, it gets really choppy, and we also experienced that again right around here. Uh, this area right here, back in October, price did hit all-time highs. It kind of reversed, but then it broke all-time highs. And for about a week or so, it was pretty bullish. And then price just kind of settled back down and pushed back and rejected it. And the entire time, basically from last year, October through November, price was around all-time highs, and it was not really going on. It was not really going nowhere. So that is an example of chop. The market is kind of stuck in between no man's land, and it's not going anywhere. We can see that we're kind of around there again. And yeah, Nasdaq just been doing that since last October. The thing is that it was possible to trade after November 20th. We could see that there was like a little RB north, and price, had several days, if not weeks, to go to the upside. And then we had some little pullbacks and price coming in. So you could buy it from the pullback on the daily, but realistically, since last year, November, it was not the greatest time to swing trade Nasdaq. That's another reason why I haven't really been trading Nasdaq is I don't like to buy high and sell high. I like to buy low, sell high, or sell high and buy lower if I'm shorting it. And so this has just been something that's not on my radar for the larger time frame. But just wanted to explain if it's been a little bit difficult to trade Nasdaq or the U.S. session in the past several months. This is why price is sitting at all-time highs. And I normally don't trade the New York session. I normally don't trade Nasdaq. I do actually like to trade gold, and I trade gold during London session and pre-New York, or Euro USD during London or pre New York. And I'll explain that price action in a little while. That's just something I wanted to just, highlight and point out there. So let's get on down to the lower time frame now and see what type of chop we were dealing with. When I go down to the 4 hour time frame, we can see that before I get down to the hourly, you should see that directional bias one more time. Price is pretty much range bound. It was a little bit bullish, but at the same time, if you look over to the far left, let me move this little tool out the way. If you look over to the far left, we see a high, then we see a low, then we see prices literally at equal highs, equal lows. Uh, it's not really making a decision. The bears are just as strong as the bulls, and we can see that's been happening until right now. We are accumulating orders. Looks like there's a potential large breakout coming soon, but I don't like to predict. And from what I could see is that the bears and bulls are kind of having a tug of war between who is stronger. And in that case, if I was to look for some trades coming into the session, um, I would definitely be looking for some potential sells if it rejected this level right around here. You can see on the far right, it's around 25,597. I would have definitely looked for some potential sells if we stood below that area. If we break above that 25,600 level, maybe there's like a, there's maybe there's some space for some longs in that little zone. I'm gonna box off this little zone right here. But if we stay below there, I'm definitely looking for some sells because we have a much larger space down below. So that's pretty much what I would have broken down before getting to the hourly chart. Let's get on down to the hourly chart now and continue this top-down analysis. Look at the hourly chart now and see. Always try to move it to the far right, even though we do already see what's happening. I don't care. This is just my own breakdown. Looking at the hourly chart, we can see that we are pretty range bound. It's a little bit more clear that we're range bound. We see a huge dip right there on Friday, January 2nd, and that was right after New Year's. Price recovered that with a really strong rally afterwards, and we just kept bouncing into these all-time highs. It rejected all-time highs, created that resistance, as we see the far left. Took out any sellers that were in here and lured buyers in, thinking that it's going to continue on up to new all-time highs, and then it manipulated buyers and hit stops as well. That's what I mean about these major levels is that the market tends to manipulate orders quite often, and it'll do that from time to time. This is accumulating orders, it's manipulating orders, and right now we're not in the distribution phase just yet. And so what price is doing now is it's once again it's attracting sellers, but it's not necessarily shorting. Um, Friday, based off of the London session, we can see that now I can look to the far left or far right. We can see that London session. I don't trade Nasdaq during London, but we can see that it kind of just went sideways. We did have NFP non-farm payroll on Friday, so I will show you that in just a minute. But we can see this little sign right here says unemployment rate in non-farm started at 9:30 my time. So we can see all the way up until 9:30, price was just pretty much choppy. The New York Open starts at 10:30, so we're going to see a rush in volume. So now I don't know what's going to happen, but based off of what I see is that if price can stay close below this, a little top wick and a push to the downside, I would look for some sells based off of this, and I would try to take out these lows or come somewhere down here. But if we can reject this level into the 11 o'clock hour and show some sort of bottom wick, I would look to buy it up. So that's all I can see based off the hourly. I don't want to look forward just yet, but that's what I would do. So now I'm going to look at the 30-minute time frame to get myself prepared for a potential trade. You can see how I don't try. I try not to look at it, but sometimes it already shows it because this is just my forward testing. We can see the 30-minute chart is bullish. So that already does what? Process of elimination. We've went over this many times that you've been working with me. Uh, we don't look for sells in bullish context. Context, pattern, trigger. Levels are a part of the context, but ultimately, when you're looking at the context, you're looking from left to right. And as you can see, this context looks fairly bullish. So I would definitely, absolutely avoid selling. Even on the lower time frames, unless you're looking at like a 1 minute or 5 minute, from Thursday, this time where my vertical line is, it's gonna stay bullish. So for me, I'm looking for buys. So we can see coming into NFP 19 o'clock. Well, you see that right there, 21:30. So 9:30, boom. The market starts at 10:30, so we can see that that got immediately got rejected right after that. That's 10 o'clock. 10:30 is when we open. So you can see that right here. There's a top wick. Looks like it pushes down, and I don't know what's going to happen now, but I would have waited for price to close above 25,600 level for a potential RB North to take out 25,669, and that would have been my play. So let's see what would have happened. Let's see what would have happened if I did trade that session. Looking at the 30-minute, as soon as price, you can already see the answer, but it's not about right or wrong. It's just about what would we have done. The market's already happened. Like, I'm not trading live right now, but I would have went long. Like I said, we can see that big green bar, and boom. Okay, yes. So coming down here, we can see that there's another news event after non-farm consumer sentiment. I would have waited until at least 11 o'clock because that is a major high impact news release as well. We can see that 11 o'clock happen right there, and hopping on into here, we would have looked at a lower time frame, maybe a 15-minute or 5 minute. So that's what I would have looked at is a 5 minute, because judging by this time frame, I still wouldn't be able to trade this because it's no setup, and we're right under that major level. So let's take a look at a 15, maybe even a 5, just to get a little better glimpse. Clearly, we can see it did go up. The 15-minute time frame, double tap that. Looking at the larger thing, larger scale. It's a little tough. We can see the 15-minute does look a little bit range bound. So when I go down to the 5 minute though, the problem is the 5 minute would have looked like what? Let's see. Let's take a look at the 5 minute. After the fact, clearly it looks bullish, but before that, it did look a little bit range bound as well, and look choppy. Look at it, sideways movement, and this is why I don't trade pre NFP. The whole day it's been moving sideways and choppy, so there's absolutely nothing to trade. Coming into NFP, we can see that it's still sideways and choppy. I would have avoided the 5 minute time frame. I would have also probably avoided the 15-minute time frame. And yeah, like I said, in hindsight, you could see, oh yeah, there was a nice buy, but basically, I would not have taken any trades on this pair on this day. It just didn't look so clean, and that was it. Uh, just wouldn't look so clean. Very difficult to trade. A lot of whips on, a lot of chop, and yeah, it just unless you came in right here around 15.15, that could have been a long if you were more neutral. Um, not trying to force anything. I'm just trying to see. Yes, you could have definitely been maybe more range bound. Let's just say if you skewed your bias on your context to range bound, there is a potential long right here. This is an RB North, and just taking a long from here to here would have been fair enough. That's like one off. And then obviously you did go for a little bit longer, maybe try to take it up here. Price would have immediately came right back in here, and would have trailed you out anyways. So the maximum I would have took was right there. You can see that it did end up continuing up. It is possible to take a long and leave a runner. So what that means is if I had two contracts on Nasdaq, it is possible to try to take it on up to these highs and trail my stop along the way. How would I have trailed my stop along the way? Well, let me just take this little horizontal ray tool and show you where my stops would have been. Um, one bar aggressive, so stop would have been right here. Um, moving forward, coming into this next bar, stop would have been adjusted down below here. Moving forward, stop would have been adjusted below the bar. Oh, sorry about that. Moving forward, stop would have been adjusted, 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 all the way until pretty much this level right here. And right around 1:30, 1:45 in the morning is when I would have been trailed out. collecting a total of about 4.3 R, which is an amazing trade. So one contract would have been closed right when price came on down to here, had a trailing stop at break even, and then I would have left a runner to collect up to 4R before I locked out for the day. And yeah, that would have been my trade if I did trade the Nasdaq. Hopefully that made sense. That's my Friday breakdown. That took about 20 minutes. You can see why I try to keep these videos short and sweet. And so now I'm debating on whether I want to look at silver or gold. Well, I normally don't trade silver. Silver is cool. It's something that we could look at during our live sessions together, but it's not something I normally trade because gold moves similar to silver, and gold is just a lot more active. A lot more people trade gold, and the price is a lot more stable. And so maybe in a future video, I can have a little comparison between gold and silver, so you can actually see, the similarities and differences between gold and silver. But for now, I don't. I'm just gonna pick gold so we can look at gold on Friday. So this is my Nasdaq trade in a nutshell. More than likely, um, judging by this context being really sideways, I probably wouldn't have traded Nasdaq. I would not have traded this, and probably wouldn't have taken a trade on Friday anyways. But if I did trade and I was a little bit more um, aggressive towards my entries, I would have definitely looked for long, and that would have been my play. Let's take a look at gold now and wrap this video up. Here's the gold future chart. Do the same thing, top down analysis. I'm gonna run this through really fast because obviously um, I could be sitting here talking for a long time, and I don't want to do that. I'm trying to keep this video under 40 minutes. A lot of markups on gold, and yeah, I haven't really used TradingView in a long time. All right, gold, same thing. Top down analysis. Let's take a look at the most recent price action prior to Friday. Um, the There's a swing high right here, swing low right here. It hasn't really moved since then. So that's going to be my level. Clone this line. Swing high, swing low. Kind of sitting around the same level the entire time. And price, see, this is also at all-time highs. You could have definitely bought it back at the lows in October. And yeah, it was a nice, smooth rally all the way up from October until recently. This is why I've been trading gold a lot more. I had a really nice month in November, and December was kind of flat, but I had a lot of winning days in December and November. Most of my time I was trading gold, Euro USD. I was not trading Nasdaq. You could already see the price action on the larger time frame. Looks way smoother on gold, and we could take a look at silver as well. Um, I can actually just for references, let's take a look at silver, micro silver futures on the COMEX. Take a look at silver. Clean, very clean. Silver actually had a very nice rally, and yeah, silver was cooking. So maybe we can take a look at silver in a little while. I really like the way silver looked because it broke all-time highs back in November, and it just kept on clean. Pull back, trigger, rally. Pull back, trigger, rally. Pull back. Oh my goodness, silver was beautiful. And if you swing traded silver, there's so much opportunity on silver. That probably looked like a cleaner pair, but unfortunately, I didn't pick silver. That was like the little silent assassin. We did not know. I did not know about silver, but I'll look at silver. Maybe I'll have a little time left on the end of this video to break down silver. But I do want to look at gold because I normally do trade gold. Gold has something similar though. It was smooth. I was able to pretty much get in on intraday and find some smooth moves. And here's a tip: if it's looking choppy on a larger time frame, I don't trade it because if it's choppy or difficult to trade on the larger time frame, more than likely it's going to be pretty hard to trade on the lower time frames. Um, that's another reason why I don't really trade the 1 minute no more, because a lot of the times if it's not moving smooth on the higher time frames, it's going to be very difficult to trade the 1 minute. Um, just a little heads up, but yeah, gold looked like it was pretty smooth since early November, and I can definitely take a look at gold and see what's been happening on Friday. So once again, we had non-farm, but it's possible to trade gold before non-farm. I just want to mark off the major highs, major lows. Um, do I see another area? Not necessarily. I mean, we could look at this level right here, and it's like a little level. You can see that kind of like swing high, swing low, and yeah. Let's look at the 4 hour now. See that these levels down below, they're insignificant. It didn't even touch that on Friday. So yeah, let's take a look now. 4 hour time frame. Boom. Swing high, swing low. I know there's a lot of these little blue dashes. I think those are sessions. Uh, so don't worry about that. This was Thursday. We have a swing high, swing low, a very similar area. And what I can do, I can just adjust it. What I'm just gonna move this one because I don't want to make too many lines, and then I'll just clone the line and adjust it to the most recent swing low. And yeah, that's pretty much it. And on the way down, you can see the level is pretty nothing really crazy. Same level, swing low, swing high. So I don't gotta really mark it up any further. That's about it. Coming into New York session or London session is I would have traded London. That's 15 o'clock right there. Right. Get my vertical line tool. Awesome. Okay. So let's take a look at so gold clearly it's bullish. Clearly I'll be looking for some longs. Bring this one on up and keep this start hygiene clean. Bullish overall, but you can see that this is kind of bearish on the 1 hour, so that's a conflict of interest. Um, Judging by this coming into London session, looking at about 44.73 level. If price could close on below there, coming into the London Open, which is about 15:30, 16 o'clock, I would be looking for some shorts, taking it down to the 44.56 levels or even lower. Coming on into that session, we can see that price kind of just closed sideways. We can see 16 o'clock right here. And so it would have been very difficult. I would actually have to look at a lower time frame to look for some potential shorts. I would avoid longs based off of the hourly being not so bullish. Looking at the 30-minute time interval now. As I said, gold is a lot more faster of a breakdown just because 30-minute looked a lot more bullish. Clearly, we could see 30-minute probably will be looking for longs if we did stay above that line. We can see 15 o'clock. As long as we can stay above 44.75 coming into 16 o'clock, I will be looking for longs. And kind of was tough. You can see sideways, sideways. That's a pre-NFP. The first hour of the markets, there's nothing. So and once we close above 4,486 level, I would not touch this at all. We can see we kind of stood sideways, so no touching, no touching, no touching. And then coming into an NFP, which was the major announcement, we could see price started pushing on down, pushing on up, chopped around. Finally came up around NFP. We could see that looking like it looked like it could take off now. And night the next session, like I said, I do trade gold pre New York. Pre New York is any time before 10:30 my time, 10:30 p.m. my time. So around 9 o'clock to 10 o'clock right after the announcement was 10:30, I would have looked for some longs. We could see that right here was the announcement for NFP on Friday. So coming into this, we could see a big bottom wick. Coming into this, I would look at a 5 minute time frame to look for some potential longs to take it on up to these major levels of 45.21. We can already see in hindsight that it did move on up, which is awesome. But looks like gold would have been something I would have probably traded over Nasdaq. Um, let's take a look and see exactly what happened. And it did fulfill its target, which is pretty cool. Um, but you can see also it's been moving pretty sideways the entire session. But overall, we can still see without forcing our eyes, it has been predominantly bullish. The entire time we did have higher highs and higher lows, even though it was moving sideways. So we can see that from this point on the left. We see the highs right here. We see the lows right here. Sorry, let me just make this chart hygiene a little bit cleaner. So we see that we left off here, swing low, swing high, price was in that level, and then we did break up higher. And then this was the most recent swing low, which is still kind of below these swing lows. So this overall is still technically bullish, even though it's sideways. So if I was to look for longs, I'll look for longs and probably try to take it on up to these levels right here. Let's just see if I would have even traded based off of what I see on the price action. So we can see non-farm happen on this bar. This is the 5 minute. I wouldn't go below that. Very difficult to trade. There's a little pop up right here. So if I'm looking for like a trend continuation north, I would look for a pullback and maybe a long coming into this level right here. And I don't know what's going to happen next because I can't fully see it. But if I were to go long, it would be pretty much right around here. Let's mark this off. And I like to do this. I like to make this. I like to pretend that I'm actually trading the markets. I don't want to cheat. I don't want to see it ahead of time. So this is me actually quizzing myself. If I'm wrong, I'm wrong. If I'm right, I'm right. My memory is really short term when it comes to looking at these charts. So I don't even remember what happened before I popped open the 5 minute. Just a moment. So let's just pop open this tool. Longs would have pretty much been, and I'm always just checking. So the thing is, this has started a new uptrend. Yes, if you look to the left, there's no liquidity levels, but based on this current price wave, I could project that we do have enough space to take it on up to the 45.23 levels now that we are clearly bullish. Stop loss will go slightly around or below the 44.85 level, and I would be taking this on up to, that's a pretty solid risk to reward. Did it go from left to right, bar by bar? We can see that stop loss would have remained the same. I don't know what's going to happen next. Looks like it still continued on going up into the New York Open. New York Open kind of had a little whipsaw. Still bullish, still overall. My stop loss, you can see this is Forex. Stop loss would not have been moved. Still bullish, still overall. Looks very choppy. You can see that this is really, really choppy in this level. So you had some options. Could have definitely trailed a stop loss around break even and had a 0R trade and get back in. There's like another potential long here, or you could have just not moved your stop. And we can see that it did fulfill its target. So I'm going to show you two scenarios that could have been possible. Because this is Forex, or this isn't Forex, this is actually futures. It is pretty choppy. So there's a pullback right here. Stop loss would have been pretty much right around break even. So it's possible to get trailed out like right here and take a little partial loss. And then assessing the trade and getting back in right around here. Let me just move this over, showing, transparency matters. This is my notes as well. So I'm not going to dupe myself out of, what I would have done. Here's another trade. Definitely put like a little stop loss back there. Would have took a partial loss, very, very small loss, and went right back in. Seeing that I would have only been trading for about, 9:30 until 11:30 would be my last trade. So yes, definitely would have been able to get into another trade, and this would have been the risk to reward about 2.5R on this new setup. Be trailing my stop below every single green bar low until price eventually came on down to either came up here, took off some profits up here once it started dipping down, and took off the rest right here. So anywhere between 2.5R for a contract. Probably had a few contracts up, maybe 2, 3 contracts, and then closed out the rest right around here for a total of about 1.7R. So it would have been a net profitable day. Still would have been a little bit choppy on gold, but gold would definitely have been a better pair for me to trade. Although we did see the risk to reward was a lot cleaner on Nasdaq. Because of the context, I more than likely would have chose to trade gold over Nasdaq. And yeah, this video is only 34 minutes long, so definitely have some more time I could break down silver. Silver, it looked cleaner. This is just me looking at the gold. So what I do for gold is I like to trade two sessions. I'm trading the London session if I don't see anything on London. Like if I looked over here, there was nothing on London. It looked pretty sideways, choppy, nothing going on. Um, then I would have definitely looked at the pre-New York and touched that. Let's take a look at Euro futures first, because I also trade Euro pre-New York in London, and I'm gonna do the same top-down analysis, clean up the chart if I have anything marked up. I'm gonna do this really fast, trying to keep this video short and sweet. I haven't touched this Euro in a long time. These levels were from back in February. I'm gonna remove the drawings, indicators, and look at Euro. See, a lot of the markets are kind of at like these highs. Now, Euro's not at all-time highs, but it is at some pretty significant highs. And we can see the Euro futures has been pretty much rallying all of 2025. And since July in the summertime, it's been kind of stuck in this little zone. There's been opportunities to push it on up, but a lot of the times it's just been getting shifted back down. And yeah, you just look to buy the dips and sell the rallies in the lower time frames. Coming into the far right, we could just mark off the levels real quick. I don't like looking over here on the daily. I like looking at the ones that stick out. You can see that these up waves on the left stick out. These are more inside waves. I could force it and try to mark this for major levels, but that's what we have the lower time frames for, like the 4 hour. If it does stick out on the 4 hour, I'll mark it up. Looking at over here, the last major level, move this out the way over here, swing high, swing low, and price kind of right here, right around here. So let's mark that up on this. Swing low. It's kind of like around here, general area. And then we did have a swing low here, but we didn't pop on higher, so that's why I leave that one alone. It's unfinished. If we did continue on up, made a new swing high, then this would have been the new swing high level, and then I would have marked off a swing low around here. But that didn't happen, and we don't base it off of what didn't happen. Just kind of want to mark that off so you can visually see. So coming on down the down wave, we see try to mark off some levels as well. Most recent swing low was around here. Very clear, very obvious. And the most recent swing high was way up here. Very similar area. Ironic. It's in a similar area. And that's it. Take a look at the 4 hour now. See, at this point, that's 240. It's becoming pretty routine as to what to do and what not to do. This is why we do these markups. It's also great practice. Gets the mind right, muscle memory. Okay, 4 hour bullish. You can see the context really is different. If the most recent swing high and low on the up wave is way over here, I don't even mark it up because it's pretty obvious, pretty clear to see. Like this was the last up wave, and price just we're way below there. We're like down here. We're far away from this little area right here, so we don't have to necessarily mark that up. Just take note. So this is a pretty easy job for the 4 hour. Look at the most recent swing high and swing low. Not around here because we didn't go into that level. Not here, not here, not here. So where was it? Somewhere around here. Swing low. Mark that off. Swing high. Up here. I don't even need to mark that because that was like last Tuesday. All right, and that's it. So coming on down, we do have a swing high and swing low that was created 19 o'clock. I'm gonna mark this off later. But for now, let's take a look at the London session and see what I would have done. But based off of this, looks like price action is pretty bearish coming into London. London session is 15 o'clock my time, so I'm gonna mark this one on off for 15 o'clock right here, and like 15 o'clock. Yeah, if we close below the 1.16820 level, Look for some shorts coming on down. We did have non-farm, so more than likely I wouldn't have really touched the euro prior to non-farm, but let's see what would have happened if I did. Time to go to the 60-minute. Like, yep, bearish coming into London Open. Maybe we trade, maybe not. Very, very obvious. Let's look for some sells. You get, like, once again, coming into 1530. You can close below 16, 1.16840. There's potential for some sells. The sells would have probably been a little bit choppy because we're selling into this level. So just would have to just watch and see. Little pullback right here, a little trigger right here. Because we're triggering right on that level, I would have skipped the euro. I would not have traded this coming into this session. Maybe looking at a 30-minute time frame. Could have probably gotten in on like a 30 or 15-minute. More, better than 15. Yeah, mean major gap on that day. It's crazy. All right. Looks very bearish on that 15. So 15-minute would have been the best time frame for me to look for some sells. We can see that coming into that time frame would have been quite difficult. I would have probably looked for RT because it looks like price is kind of like tricky. So for me, right here, stop loss would have probably been slightly above here. So let's see. And once again, it is NFP, so be very careful. It could be a stop out or two before the move really goes underway. Like a little stop loss right above here, 1630. This was 16 o'clock, so kind of coming into here. Stop loss could have been like slightly above this line, so you could have been stopped out before the market really moved, and that's totally fine. Or yeah, you can see it just move sideways until NFP. So if you did trade pre-NFP, it was likely that a loss could have happened and then it went sideways and would not have been trading that. Post NFP though, let's take a look and see. After, you can see like these giant moves that it makes. That's NFP for you. That would have been a freaking 35 pip move. Yeah, giant moves, giant swings. But coming on down to here now, we have a RT sell. Knocks out these levels, comes back down, beautiful shorts right here. So this is what I mean by I don't like trading pre-NFP, but right after NFP, these are beautiful setups. So there's a setup right here, stop loss right above here, and yeah, would have took it down. The next major level technically is like way below here. I don't know if it would have went down there, but I would have definitely just been trailing it. We can see that it did drop off sideways for the rest of the day. There was a possibility to make maybe like 1.5R coming on down to here. Just kind of want to show you. You could have trailed out at break even. You could have trailed out, collected some profits down below here. I just want to mark this off very clean for you. 22 o'clock. Yeah, right around here. This would have been the sell. And 1 bar aggressive probably would have been, yeah, this could have been close to break even. Realistically speaking, it doesn't look like euro really did too much. Once again, it looks like it chopped up as well. So, there was a possibility of taking off some contracts down below and then leaving a runner, or just leaving it at break even, because this also looked like it was not the cleanest price action, unfortunately. So yeah, not really much to trade. Looks like the PA was pretty choppy, pretty grindy. One more thing is, could you have looked at the 5 minute to look for the optimal entries? Well, if the 15-minute was bearish coming in, I definitely would have looked at the 5 minute and maybe could have found a nice 2R trade. 5 minute was obviously bearish, so let's reassess this market condition and see. NFP was right around here, looking for a little RT sell. Came in maybe right around here, 2150. Free right around here. Stop loss could have been right above. Taking a 1 hour loss, come back, take another trade, stop loss right around here, and take it on all the way down for 3.5 hour trade. So on the 5 minute, more than likely that would have been my setup. 15 minute, you could have broke even. 5 minute looked way more beautiful. 5 minute, I would have probably trailed my stop loss. 1 bar aggressive right above here, and came out around 2.3R, and that would have been a lot better of a setup. And this is more realistic as to what I would have traded. So yeah, right around here. Trade would have lasted approximately 22:05 to 23:25, so a little bit over an hour, and yeah, would have been able to collect about 2.3R on that short. So ultimately, if I were to pick between gold and euro, I would have more than likely traded euro. This is why I like to watch multiple pairs. I watched 2 pairs. I trade 1 pair. Euro looked like it had a cleaner setup. It was obviously bearish. It was obviously waiting for a breakout. And yeah, if I were to compare the two, you can see one last time, GC gold futures. One last time. So that was a really nice trade. Nasdaq a little choppy, but yeah, gold futures, we can see that based off of this time frame. 5 minute, yeah, more bullish, a little sideways action, but definitely would have been able to get into gold futures as well. Looks like I said, the first trade probably break even. Second trade, could have been like a they would have both been winners. 1.6R. So this is subjective. If you wanted to trade gold, you could have definitely traded gold. I mean, I would have still been able to make money trading gold. I would have been able to make some money trading euro. But as you can see, they're both pretty similar, very, very similar. Um, they are moving in opposite directions, but I mean, by as far as my results, I would have been able to trade gold or euro, and I just go back and forth. So alternate between the two. You can see uh, there's a euro, there's a gold. Gold would have been 2 trades, and out of the 2 trades, I would have probably made a little bit over 1.5R. Euro would have been 2 trades, would have taken a 1R loss and came back in for 2.3, so could have been about 1.5R too. So now post session, I only have time for these pairs. I will break down silver just because I did kind of mention that. Um, so this video is a little bit longer because I'm going to break down silver as well, but you can see how I build my confidence after that. It takes some time, but this is why you have to practice. Practice makes perfect, and only you can ultimately tell what you would have done. And yeah, I would have followed my rules. That's the most important thing. Would I have followed my rules during the session? And if I did, where would I have gotten in? Where would I have gotten out? Transparency matters. Look at that big old NFP wick, humongous wick. This is why you don't trade NFP. If you're in this trade anywhere up here, once that announcement happened, look at this. You can't even see that. That's a wick. Giant wick. John Wick. You see that? That wick stopped like right down below here. Huge wick. And it takes everyone out. It stops you out. But yeah, let's take a look at silver to wrap this up. I'm gonna go off to the daily time frame and mark that off as well. So yeah, looked like it was a decent session. You can see how it was less choppy on Friday. If you traded prior to Friday, you probably would have been a lot more chopped. Um, if not, probably wouldn't have even traded prior to Friday because the markets were waiting for those numbers, and that's why I don't trade the first week of the year because we're waiting for non-farm. I will if I see something solid, but I would more than likely trade with less risk. I'd be more risk averse coming into non-farm, and then right after the announcement, literally the minute after, I can trade normal. Um, let's look at silver. Wrap this up. Micro silver futures. I'm just gonna skim through this because I want to keep this video short as I can. Swing high. Where's the swing high? At this point, you're a professional at this. You've seen me do it so many times. Swing high right here. Swing low is right around here. On the way down, we don't have one. That's it. Very simple for silver. Looking at this 4 hour, we can see a swing high right here, swing low right here, swing high right here, swing low right here. Oops. Trying to click and drag. Right around here somewhere. Yep. And on the way down, yep. Don't even see a swing high and swing low. So that is insignificant. Looking at, so that's my levels for silver. Very, very quick. Bullish overall, we can see that 4 hour from swing trading, very bullish. Take a look at the hourly chart. I like to put it on full screen so I can see the clearer picture. Let's put that vertical line down. Silver, I would have traded around moment London session and pre-New York, just like gold. They are commodities. The London session is around 15, 16 o'clock. Looks very range bound on silver, so it's possible to look for some longs. But because we're below, you see we're below this level, I wouldn't even touch longs unless we bounce from this support, and we did not. So silver would have been in sideways, no man's zone, pretty much just sideways. It's not going anywhere, just barcoding. So I would have left silver alone. London session, and coming into pre-New York, maybe I would have checked the pre-New York. We see pre-New York is around 21 o'clock. Look for some rejections. You see that, how it just hiked all the way up. So that's cool to see that. Let me mark off another line to show you. Sorry about that. This is a little bit jumpy. Use my own vertical line tool. 21 o'clock, 21:30 was a NFP. It did hike on up here. So I would wait for a break above here, 80.1, to see if I can take a long to 81.2, or I would have waited for a rejection and then hopped onto the lower time frame. So based off of this, we can check out the 30-minute time frame. This might just be just under an hour, which is great. Bullish. Player as day, bullish. Looking for some longs coming into that 21:30 would have been optimal. I can't see, so I'm just going to move it over so we can actually see what actually did end up happening. Um, yeah, it was very strong for buys. What's strange is I wonder if I'm missing a major level because it looks like price kept rallying, which is good if you're looking for longs. But did I miss a major level? I like to just go back, just double check. Yeah, on the way up, I guess there's a swing high, swing low right here. So could have definitely. Let's see how different this would have been. So I personally just missed a major level. Can't really see it on this chart. That's why I didn't. I literally just didn't see it. But yeah, this is like a little major level on the way up. Based off the 4 hour, this is the most recent up wave. So yes, this would have changed what I would have seen. 30-minute. Let's see what that would have been. Coming into London session. Okay, longs. There we go. I was like, okay, we're moving sideways, but there's no major levels. I wouldn't have touched it. But this definitely changes the narrative. Very much more clear. That's why you always got to go back, double check. Like, something's off. So yeah, if this was based off this major level, wait for a close, wait for a little pullback, and trigger on north. Where would my stop loss be? Based off of this, my stop loss would have been right below this level, 76,645, and I already forgot what it did. So we got right here 1430, came in right here. Silver would have been a nice trade to take long. Because the context is much cleaner on the higher time frame, this would have probably been better to trade than gold. And that's what I'm probably going to do in 2026 is I'm going to look at both silver and gold. Sometimes silver has a better time context on the larger time frame than gold. So I'll probably end up trading silver a lot more frequently. We can see that there's a long right here, TC North. Um, I can mark it up, but you can kind of see. I'm not going to draw it all on my chart, but you can see that little arrow tool. That would have been an entry. Stop loss would have been like 1 bar aggressive, a little below this major level. And let's see how far it would have went if it did. Like I said, I already forgot. My memory is really short when it comes to doing this. Like I only remember what I did at the time, unless I took a screenshot. Because there's so many bars. It's like, hey, Baja already knows what he's doing. No, I really don't know what just happened. Like I know I looked at the higher time frame, and I already know that there was a major rally that came on up to here. But I swear I'm not cheating. I'm not making things up. And I'm not trying to fit it to what I seen on the higher time frame. My brain is literally, I'm human. So I don't know what it's doing right now. I just know based off of what I can currently see, and that's how I train myself. I try not to predict. I'm just reacting to what I see, and this is exactly what I would have done according to that session. Now it looks like it would have been chop, chop, chop all the way into NFP, so we can see that price didn't go anywhere. So maybe NFP would have been the better time frame to trade. So this would have probably been scratched at break even, because I don't hold through NFP. I actually wait until NFP and then I get back into the position. So that's what just me being realistic. Let's see what would have happened. See, right before NFP, price, wham, moves down. Does not stop you out, but coming into NFP, break even, flat. Then NFP happens, right? This is a very nice pullback. Pulls back into the trough of that last dominant bullish engulfing candle, and a beautiful long right here. So this would have been scratch, break even, and then I would have entered another long right after 21:30. I do like this time frame, so more than likely I would have took it based off of the 30-minute. And yeah, I could have went down to a lower time frame, but this is also really nice. This is the TC North. I took it on up to these highs. I knew I was missing major levels, but that would have been a beautiful clean trade, 2.6R. No losses, a break even, and I would have trailed out 1 bar aggressive right around here. Um, Mark this off so you can see right around here for a little bit under 2.5R, 2.3R. So I would have had maybe took off a full contract. Yeah, everything probably would have closed right here, 2.4R coming into this level. So that would have been my trade for silver, and I don't trade anything after that. That would have lasted a few hours. We can see that about 9:30ish, all the way until right after midnight my time, and that would have been it. So silver would have been the best trade, best setup. So is it possible to trade silver in the future? Yes, absolutely. If I continue that rally, we're not in a range, and this is a really nice setup. Um, if you look at the weekly, it's probably a little bit more clear. Beautiful. Silver is on a rally. I think silver is going to be really good. Another thing is gold. Gold does move during wars, but silver moves a lot during wars. Why? Because they need metals. They need like silver to create the missiles and the tanks and the drones. Everything uses silver. A lot of things do use gold as well, but when it comes to wars, everything uses silver. So silver has actually been rising for quite a while, and I think this is the underdog. So if you are looking at silver, and I'm glad you brought this up, silver is actually the underdog, and I'm gonna probably look more into silver this year. I don't hesitate adding something new to the arsenal. If I'm looking at both silver and gold and I see that silver looks clean, absolutely I'll trade silver. Let's take a look, a comparison. Here's silver, here's gold. Gold is still a very nice to trade, by the way. But I think that people's attention is like really on gold, and gold is like, it's breaking all-time highs. So gold is also really nice. If you're looking at gold right now, you can see that uh, it was struggling a little bit the beginning of January, but it is starting to push back on up as well. So gold is also looking like it's going to break some new all-time highs, and I would say both gold and silver is good. They go neck and neck. It all depends on what's the cleaner price action, the time you start trading. The reason why I don't trade silver as much is because I'm used to trading gold, and I don't like to add new things if I don't have to. It's like trading euro and the pound. Like I just rather trade euro because um, it's more liquid. And same thing with gold, silver. Gold is still more liquid overall than silver. So maybe some days if I'm looking at gold and it's a little bit choppy intraday and I can't really find anything, maybe I'll pop over silver and say, okay, maybe silver has a cleaner price action. I'll trade that. So on this specific day, um, looking at that gold trade coming into here, maybe okay, 15-minute looks a little choppy. What did I say? I was going to look at the 5 minute. Not really choppy, but a little conflicting. Looking at the 5 minute, we can see coming into here. Yeah, it looks a little sideways and groggy. So would it be possible to look at the silver instead of gold on this specific day? Let's take a look at the silver context. Yeah, I mean silver looks a lot cleaner than gold. You can see looking at silver coming into here. Um, Could have definitely took it on up to all-time highs, knocked that out, came back, looked for some more longs, knocked it out, came back. Silver would have been way better to trade intraday. You can see that rally was beautiful. And then once again, one more time compared to gold before this is over. Gold was a little bit more sideways, a little bit more choppy, still tradable, but maybe I'm gonna start doing that as a new method. Just compare the two and be like, okay, gold, silver, gold looks like this. Ew. But we did break all-time highs. It's just looking at here. Contacts a little bit sideways. Uh, could have still been traded, definitely, as soon as we broke here. NFP, but before NFP, if I'm looking at London Open, realistically, I don't like trading this. So I would have looked at silver over gold. One more time, I like to do it side by side. London session, as far as London session goes, I would have definitely uh, rather trade silver coming into London Open. Took it on up and then got out right before NFP. And then silver or gold would have been smooth NFP. Here's NFP. Coming into NFP though, which one would have been cleaner? It's subjective. Silver did have that nice push, very nice thrust on the upside uh, coming into NFP. So yeah, it all depends. Either way, they were both pretty solid, gold and silver. But yeah, silver definitely had the winning trade of the day. And now you can see in this hour-long video, I broke down my Friday, all the sessions on Friday that I would have traded. I don't normally trade Asia session. It's just way too early for me. It's like 6 a.m. my time, and I'm not getting out of bed to trade a session um, just because I want to trade. If I only trade 1 to 2 sessions a day, I'd rather trade the later sessions where my mind is a little bit more sharp, a little bit more adjusted. I got my breakfast or lunch and got my meal out the way, and I'm more focused. So as you can see, how many pairs did I break down? I broke down Nasdaq. I broke down the New York session. I broke down both gold, silver, and euro, and I did do 2 sessions each on those. So I broke down about six. I broke down about 7 sessions in the past hour. This is great practice. This is why I don't really require much practice outside of my normal 2 hours a day. I'll trade between 1 and 2 hours a day, even on the weekend. I'm only practicing for a couple hours on the weekend because this is all you really need. You follow your rules. Is there anything new? Yeah, I guess I'll throw in silver occasionally, but other than that, we can see that coming into the next week now. What do I expect? We can't really tell based off of the lower time frame, but judging by the 4 hour time frame coming into the next week, I'm actually going to look at the dailies more clean. Come into the next week, I'm looking for a potential breakout. If I'm swing trading or investing longer term, holding this, yeah, looks like we're going to continue more bullish. Here's a trade based off of this. Um, A little long right here. I'm just looking, like, kind of got a little stopped out, and a little tricky right here. Definitely a little tricky. Silver looks like it's a little tricky on that time frame. Not gonna lie. That stop out probably happened pre-NFT, so this is a lot more clean. But judging by this, looks like we're gonna continue northbound on silver. It looks like we're gonna attack all-time highs and see if we can continue rallying north. That's gonna be my forecast for the next week. Looks like silver has some very clean price action, so I'm definitely gonna look at that, add that to my list. Thank you for whoever said let's look at silver. I know several people recommended that. And then also looking at gold coming into the next week. It's kind of complicated looking at this right here. Overall, it does look pretty bullish. So gold as well, looking to take it on up north. See a little NFP came out the way, so we have much cleaner price action. Looking like we're going to take out these levels on the left. Uh, it looked like some nice buys coming into gold and silver next week. Looking at the daily chart on gold, in a nutshell, yeah, gold is also pretty clean to the upside. I think gold is going to keep on rallying next week. Well, let's take a look at Nasdaq. More than likely, I'm going to be trading the pre-New York and the London session. I don't know if I'm going to actually trade the New York Open. If Nasdaq is looking kind of choppy, which is pretty much what it's doing, is ew. Looking at gold and silver. This also can help you determine what session to trade. For me, looks like Nasdaq might be undergoing some more chop because it is struggling to break those all-time highs. But if we can break all-time high, stay above, and continue north, then yes, I'm going to be looking for some longs in Nasdaq as well. And judging by this, though, Nasdaq is in a tough zone, very tough zone, very very tough. Um, we could potentially break higher overall, but it is very choppy. So if I had nothing else to trade and I only trade in New York, yes, looking for longs on Nasdaq as well. But I would really really avoid Nasdaq longs because it's a little uncomforting looking at this. I'm just gonna avoid the New York session next week and avoid trading Nasdaq. And the last thing was 6E euro. Take a look at 6E euro, euro baby. I like euro. I've been trading euro for many years, but sometimes we don't have the cleanest context, and in this case, looks really tough. Probably avoid trading euro. Looks like we are potentially short term looking to drive it back to the downside. I'd be more comfortable looking for shorts on euro, and therefore I'm going to be looking at if there's absolutely nothing else to trade, I'll drop down to the euro and looking at this lower time frame for it to continue this bearish decline to the downside for euro. So that's going to be my breakdown for euro. Look for continued shorts and selling. Um, you can see on that 4 hour, I think we were range bound on the 4 hour. Not necessarily. We're just pushing on down. Euro shorts, gold longs, silver longs, Nasdaq flat. That would be it. I'm trading pre-New York, London, avoiding New York session next week, and this would make the difference between boom and bust traders. Some traders have a more difficult time than others because also what they're trading and what time they're trading the pair that they're trading. As you can see, if I am trading Nasdaq during New York only, I'm gonna have a very tough month because everything I just broke down, it makes more sense why Nasdaq is struggling. So if that's your portfolio is built off of Nasdaq only, or tech stocks or the stock market, US Open, you're gonna have a choppy month. But if your portfolio is based off of metals, silver, maybe even the euro, you're gonna have a much more profitable month because looking at the higher time frame, you can see the more clear direction and you can see the levels that are broken and the levels that are currently holding. And you can see that there's much more cleaner ranges to trade on other pairs. So um, that's my recommendation coming into the each week on a Sunday or Monday. take a look at that larger time frame, take a look at the bigger picture of each pair that you're going to trade, and start to create your playbook and your game plan on what are you going to trade, what sessions are you going to potentially trade, and then you could fit the news in and seeing what's happening in the forthcoming days. So that's how you can avoid a potential choppy month and have much better results is looking at that higher time frame. It's a simple task, simple thing that you have to do, and it would really save you. Because yes, you can be doing everything right. You could be doing everything right. You could be following your rules. You can be doing everything step by step, showing up every day, and you can still have a rough month because it's just what you're trading. The context is not ideal for certain pairs, even if you follow your rules. And that's how you have good months and bad months, even after following the rules. So I talked enough. Hopefully, this video was very informal and gets your mind a lot more clear. This is just me doing my homework. So if it helps you, awesome. You can take, pick my brain, take some notes, and um, use whatever you find useful in this video and add it to your arsenal to make you a greater trader. Have a prosperous week and reach out to me if you need any further help. Peace.